Here's my where is the link for that AI? Was there? Where did the AI? It was
Actually, at the right of the
okay. There you go. Okay,
record
good.
sign.
I got it. I got like six different windows open. Um, let's get to this. So we here the bear market low, okay, of October 2022, 3491.58 to be exact. It was a 38% decline from peak to trough. It was I mean, quote me if you want to label that thing, it was a clear zigzag move. Okay. You have that time you had one, two, three, four, five. That's your A, that's your B, and that's your C. Okay. So it was a 38% decline to 3491.58. When we put a low here, market rallied for 41 weeks. Okay. Right to this point right there. The market rallied here, market got a setback of 12.4%. These are weekly bars. Okay. Then it put a low right here. Then market rally for another 38 weeks and up to here, to this high. Setback for 10.7 to this low. Then we had this April sell-off. Okay. Now we take the April low to the high, it's 42 weeks. What do you see here? What do you think is going on in the market since from the last 4 years? This is a 40 week setback over and over again. That's 4-year-old chart. It's a long time. Market it clearly shows this market resets after every 40 weeks. 41 weeks, 12.4, 38 weeks, 10.7, 42 weeks, 10.2 so far. Can it go down another percent? Sure. Can it go down another 2%? Yeah, it's possible, but it's almost there. But like if you look at this thing, is like this market just sort of keep repeating the same thing over and over again. This is not like you're trying to compare a 2-year-old chart or 3 year. This is a 4-year-old chart. Since I mean, this is S&P is double now compared to what the low was at 3491. Went to all it went from here all the way up to 7,000. I mean, we can measure it exactly how much was it. We take this low to this high. That's 100% move, 100% range in the last 4 years. But the point now is like, is this some unique pull setback that we never seen it before or traded before? Sentiment was worst here. VIX spiked. Sentiment was worst here. VIX got a rally. Sentiment is worst here, and VIX is moving. So what is different? I mean, down the road, yeah. I mean, if the price does manage to come down another 100, 200 points or so, which is fine. Another, let's say, call like 11, another 100 points, 100-point dip will be 11%. Another 200-point dip is going to be 12%, right? So I mean, we're already sitting at COVID low RSI reading right now at as of yesterday. So risk reward here sucks. You trying to sell now the oversold market, not just oversold, extremely oversold market. So, I mean, yeah, I mean, it's never going to be a perfect bottom. It's never going to be a perfect timing on anything. Nobody can time the market. Can I can show you 10 different her cycles and it just I mean, yeah, we use them as a contact, but that doesn't mean that low will be in at this month and the low is going to be on this week. And that just doesn't, that just talk, that doesn't exist. Market doesn't trade that way. Nobody knows these tops and bottoms that just never exist in trading. It never will. You know, I mean, I haven't, I mean, I'm buying few positions. Like I haven't really bought anything to be honest. I'm gonna buy real heavy stuff, but not, I mean, not now because I'm waiting for rotation to improve. So, I mean, this is a very interesting chart. Okay. Like how this market is resetting after every 40 weeks over and over again. You know, it's just like it's always like because everybody is like not happy about them because it's the same thing here that nobody was happy about them. Same thing here. It's just like if you look at the drawdowns from this is the big one, right? 38%. That's huge. This is 100% typical bear market right there. Anything over 20%, okay, this is the official bear market. Just that's the fact. Wall Street is gonna print the newspaper overnight as soon as you hit a 20% threshold from any peak to trough decline. 5 to 10, 11, 12, that's just considered as a correction. But the only point now is can the correction turns into a bear market? Well, we don't know that. Yeah, if it's going to get double, yes, it will. Then we'll put a red label on them instead of pink. But for now, we'll just use pink as what the peak to trough decline is. And it's been happening over and over again. It's not a broken trend. I mean, just I know like last year we had a same thing here. Like if you look at a time window here, which is December, January right there, last year. So the last year price action is from here to here. So basically you call it as your first quarter sucked last year, right? Is January 3rd, whipsaw made a couple new highs, and then there comes a tariff. It took a dip, and and the time frame, as you can see, the February 21st was the high here, and then it flushes down because of those tariffs. Then put a low here somewhere around April, right? So on this one, we put a low here in October. This one. So this was in October. This low was made in August. So we can actually uh, mark this thing. So this low was October 27, and then this low was on August. This low was April, which we all know it's April low. And then this one was in October as well. So we have two bottoms. They were um, a 1 year apart. It was here. That was the bear market low on October 14th on Friday. And then October 27th on Friday put the low on this correction. This one carried over until August. This one into an April low. And I don't know what is going to happen here, right? So if you look at just as a time, just to get an idea, so we have a 1 year window here, right? So you have one here, and then from August to April is how many months? June, July, August, September, October, November, December, January, February, March, April. Right. So that went to 8 months. So you have a 1 year here and 8 months here. That's to the downside. So it's a very interesting chart, very interesting cycle, I would say. What market has been doing from the last 4 years since we had the bear market low. Because we haven't had we had a bear market. This is a bear market as well, 27% decline. But the question now is this. When you had a bear market, when you got this setback after a bear market, so that happened last time. Here's a bear market, and this is the phase first compared to this one. I would make a case of this move from here. Because when you go back and study all the chart, you don't see a bear market 10 and then leads to another bear market. Because if you notice that on the way up, the the percentage range is getting smaller. You know, the major trend move is when you have retracements that are getting larger in a magnitude and length compared to your prior swing high and low. Well, we're not even close to it yet. But I don't know what future holds. Okay. So it just 2022. This one? Yeah, it is 38. What are we talking about? Okay, I'll do it for you. Here's a low. Here's a high right there. So I will stop the cursor. It is 38 from peak to trough. You can do it manually. Oh, this shows 27. Yeah, you're right. I gotta go to the top. Man, I made a mistake. Gotta go. Mistake. I went from the bottom. Went to the bottom up. I need to go from top to down. Because I went from bottom up. That's why you're right. Oops, posted this one wrong. Because when you measure from peak to trough, it's going to be showing negative 20s. That's where it's supposed to do it. I went from bottom up, so it shows positive read. You know, so I need to correct this. I even post this thing on freaking Twitter as well. I was oops, like it shows a little bit larger retracement. So we need to do the same thing here. So instead of going from bottom up, it's just going to be the same. So we need to go from, see, it's negative because when you measure from peak to trough, it will show a negative read. When you do a bottom, the from bottom to the top, it's going to show a positive read. So we just need to change these from where the heck is the low? Right there. Where's the low? Here. So I need to go change this. No, low was here. Where the heck is the low? Ah, okay. Some of these lines is here. So we can do this pink. We can do this pink. So we would have, no, we can do this one pink, this one red. These are the major ones. And then we could do this. That makes sense. Pink. There you go. So now it's correct. Yeah, I should have gone other way. I went from bottom up. So that's okay. Now it's fixed. Now it's exactly exact measure move. So it's a 27% here, right? 27, 10.9, 14.1, and now it's 9.1. So that's the, so we throw an RSI here, right? So on the RSI read right now, as of yesterday, where we close out the week, sitting at 10, right? So the last time on April low, the reading was 8.33. So we can just draw a line like this, or almost there. Might get, I don't know, might get one more shakeout. We're almost there. So on this one right there, the RSI reading was 17, this low right there was 17.48. So on this one right there, see the RSI has not made the low yet. It didn't get extreme move. It did it here, you know? So now if you look at this low right there, which was 12.32, and if you move the scale up, that was this week right there. So RSI made the the low right there on this decline. And I got the bit of a 2 weeks of a rally, then backs away. And now if you notice it here, what happened is that the price dipped, made a new low, but the RSI did not. See, it held. So from here, that's why you got this move, which is this move right there. So then at the same time, if you look at the same thing again, market took a dip down, put an October low, RSI did not. You see, it didn't make a new low. So when you see this, this is what they call the bullish divergence. The price making a lower low, but the relative strength is not confirming that. And that's what from here is this move up right there. So we're right there at 10.70 as of yesterday close, down to the reading of April low, which is right here. So can you stay in overbought for another weeks? I mean, yeah, it's possible. But we did yesterday that S&P and the futures are down 5 straight weeks in a row. Can it go six? Well, we're gonna find out next week. Next week is a short week anyways. So because of the Easter. I was really thinking about I was gonna do it yesterday, but I was like, I don't know what the heck is gonna happen over the weekend. I just put a new butterfly on Monday. It's a short week. We could try taking advantage of a shorter week. It will the premium is gonna decay really fast. But butterfly really doesn't pay a lot when you have a kind of sharp decline, you know. Butterfly really doesn't like heavy sell-offs, you know. So it just I was kind of holding off. Looked at him yesterday. I was like, I don't know if I wanna. Then it just that 100-point dip, and then when you had a butterfly sit in, it's just well, theta is definitely stays positive in your favor, but it doesn't. Uh, the the this one is not 14. God, what's going on with these? Okay, here. I went all the way down here on this one. The it's just like you don't need a massive sell off with the butterfly. It doesn't. It, you could the butterfly can't handle um, a dip because you're theta positive. But it just you don't need wild moves. But butterflies are lazy trades. You just can manage to find some sort of a consolidation where market just kind of chop. Those are just that's when the butterfly like literally thrives, you know. But we'll do it. I'm not gonna, I do it all year long anyway. So I'm gonna do another one on SPY and I'll do one on the SPX as well. As always, I do always do both of them. So, um, SPY is a little bit cheaper debit, S&P definitely, premium is always going to be debit is always going to be more than double because it's a much higher expensive index. But the theta and the premiums on the S&P is just really rich. So it adds up really, really quick. So we'll see. I mean, no, it's correct. I should have gone the other way, but it's okay. Sometimes you mess up. But I mean, it hasn't really. I mean, the percentage ranges are one thing, but the main point is how long does the actual bull run last until it resets? That's the main point here is from the last 4 years that we're looking at it. You know, now if we could do this, is how long the correction lasts. We could do that as well. So we could take this high right there to this low. That was 13 weeks. Okay, let me change that thing into weeks. So this stayed 13 weeks. This one right there was a quick one. Only lasts 3 weeks. Let me change that into three. So you have 13, 3, and this one so far. Uh, Where is the high is made on this one? Anyone? This thing kind of moved. high is made here. It's, come on, move on the side. Do I anchor this thing up on the top? There you go. I'm just gonna clip it as a magnet on it. Okay, there you go. So the high was made here on January 30th. Right? Let's confirm the high read. Yeah, 7,002. Okay. So we go back. So this is good. So we anchor that thing right. So now do this, move this box, highlighted box, move from this low. Okay, there you go. So it fits right. Okay. So what we were doing is we were trying to see how long that thing lasted. So it lasted 13 here, 3 here, and then so far we're at 8. So we're 8 weeks so far off the high from the high. So this is 8. So 13, 3, and 8 as of yesterday close. Right? So well, the point now is like we're just only measuring this low. I mean, well, of course, the time will extend more. It depends where the price will settle, right? So you cannot really make this as an official count yet until the price ends up making a new high. That's the thing, though. So is this correction going to last 9 weeks, 10 weeks, 13 weeks? Anything is possible. Let's say if we go 13 weeks compared to this, I mean, the percentage wise was almost there, right? The percentage wise is almost there. It's just a matter of how much time this thing's going to chew now. So I'm just going to leave it here. I'll save this one and then it's not gonna, I mean, it's nothing that there's much we can do, but we just keep an eye on them and see how it goes week by week, over time, how it plays out from there. And if we end up making a new low right there or something, all we gotta do is just slide this thing down, depends where we end up putting the low. Just have to leave it there. I mean, the official, like the actual mark like this, once the low forms and then when the price rallies, takes out the highs, is when you have the exact measured move lower. So same thing here, like you had the actual 9.7% dip, market reverse, right back up. So you can just measure it like this. So it's an open debate right now. So we'll see what happens. We're sitting right there 5 weeks with this kind of extreme reading on this thing. My target still stayed at 75. I don't know if we're gonna get there. When are we gonna rally or whatever? Um, but I mean, it's just rotation wise and stuff. I know it's gonna take some time. You gotta have to understand one thing is first we need to have 3 higher highs on a daily chart is to turn the daily swing up. That's one thing. Second thing is this: we need 3 weeks of higher highs, okay, to flip the weekly swing up. Okay, so we're a little bit in a trouble right now. So market got some wood to chop. I posted this thing yesterday as well. If you look at the weekly, it's always this is the most the the current re the the exact measured moves. So the swing is down, right? We've been down for 5 straight weeks. So now if we calculate time from 7,002, we're down 8 weeks now, 9.2. Qs are down 8 weeks, 11.8. Q is always going to be a little bit, always going to be more. Russell, 8 weeks, 11.4. So you have 11.8, 11.4, 8 weeks, 8 weeks, 8 weeks, 9.2, 6 weeks, 10.8. You know, what I've, what I, what I'm really starting to like is one thing is everything is behaving now the right way. There's gonna be a, the reason why I'm saying this is gonna make me much, it's gonna make it much easier for me to line up all of these wave counts one by one because they're all gonna be, we don't have the same, the, the, the values going up and the small caps are ripping and the tech is dragging down. You see, like everything is resetting back with how it's supposed to. When market rallies all across the board. When it dips down. So there's those value small cap rotation that everybody's been talking about from the last 2 months. They're saying like, yeah, the value stock are is the way to run. Well, no, it's the value stock is not gonna is not gonna run S&P to the upside. Generals the ones needed for expansion in the market phase. So right now it's just like as you can see, like everything is resetting back to the exact same percentage range and with time as well. Okay, so this is a really, really good way to, we don't have those mixed bag. Because what happens is once you will have a smaller retracement on one index, right? And then you have a larger one on the other one, it's very hard to match the wave count side by side because your wave depth will change, right? So it just, I'll fix it. You don't have to worry about that. Don't worry, you don't. There's one thing that I want to make it clear. You don't have to worry about labeling, how to label a wave count. You leave that thing on me. Okay. I don't spend a lot of time on Elliott wave. When I do it, when I'm in a mood, I'll do it. Other than that, I mean, I don't need them, on like on every day, on day-to-day basis. I need this. Okay. It is doing the same thing what Elliott is doing. Okay. Elliott just requires a lot of labeling. This one is just gives you the exact measure, moves, time, price. It's all here. Okay. I mean, we know where the swing low is. We know where the swing high is. Just not. I know some of them are pretty obsessed with Elliott wave. Is it the B wave or an X wave or this and that? A guy was posting yesterday on the community chart is because one guy posted a complex WXY. You have a double top, okay, right here at 636 and 637. 637 right there is the high of October. This high right there was 636.60. You have a double top right here, okay? So if you end up doing this as A, B, or a C, or if you can do a W, X, or Y, it really doesn't make a difference. It just does not. One guy's posting a WXY correction, one guy's putting an ABC. It really doesn't make a difference. The only difference between a flat and a complex is the C wave comes down in a 5 waves. Y waves will subdivide into a three wave. That's the only difference between these two. This comes down in three, that goes up in three. On a zigzag, yeah, you will have five down, three up, and five down. Okay, those are like a 12-year-old can label a zigzag move. Five down, three up, and five. These are the ones that are the choppy ones. Because if you take this high right there to this low, okay, you cannot make this is 3 weeks. Okay. You cannot make this and thinking like, oh, how I'm gonna make this thing work and as a five-way move down. It's not, right? It doesn't look like, I mean, you can just do this. I mean, if we would go to a two-bar swing instead of three, that will give you a more swing read there. So two bars will change direction faster than a three-bar swing. So you could easily count however you want to label this thing. Two can help you a lot with counting. Okay. But I don't really rely on these uh, two because you get too many false reading on swing because swing changes too fast, you know? So I mean, this was the pivot low at 580. So if you can just write here a broken support, well, yeah, I mean, it's not a rocket science. It's a pivot. This is the pivot. That's what these dotted lines are. Okay, so any rally that we do get from next week or the following week, it's going to be back to 6,500 minimum. Okay, a broke now. What is going to happen is this: the broken pivot will act as a resistance on the way up. So always remember that. Okay. So whatever the low is going to form, whatever the low is going to be, and then basically what it is, that the price just has to reclaim, goes back to the pivot. It's going to test the pivot. It's going to back off. Okay. So it tried here last week, as you can see, but closed down. It closed here. Then it got the move up right there. Then we closed down. You see, now we have an official down. We have a close below this pivot. So just don't get too excited over a WXY or ABC move. I know this guy Ruben is like all over the place. This is invalidated. This how it can be invalidated? That's why an actual a flat of an ABC, a B has to retrace at least 90% of the A wave anyways. So how it could be a flat? A B wave can go to 127.2 extension as well. A B can go all the way back here. It has, according to the book, to the rule, it's basically it's a 90% retracement of a first decline. The B wave can give you a false break to the upside to 127 extension as well. Then it comes down. This is what you call a flat. 90 to 127%. Anywhere the B wave here can fail is called a flat. A flat, or if you have an A here and you had a B here that went up like this, and then it end up like this, the C wave doesn't make a full five swings down to the new low. It's called a running flat. Okay, corrections are very subjective. You can't just sit and just like dance around changing, assuming like, oh, this and that. Just leave the way it is. Just I would much rather focus on this because Elliott is not calculating time for me. This one does. This gives me exact percentage swings that I want from peak to trough. I know where the peak is. I know where the trough right now. So any retracements and stuff that I need to run, I simply just take the high and low. So like, okay, I want to see from here to here. Okay, well, what would be my first upside retracement? 6,500. 6,500 is what? 23.6%, right? So any low, whatever is gonna be, okay, so that's gonna be a first target to the upside that we'll try to chase. And then depends how the price makes its way up from there week after week after week. This is where the retracement is from peak to trough. 7,063.56 as of yesterday. So obviously, yeah, so the price does makes low, so does the scale is gonna move lower as well. So I don't know what the low is. Neither do you. It's gonna go down to 6,200, 6,100, 6,000. I don't know, 5,800, 5,000. We don't know. I don't know that. We're gonna see how extreme the reading gets, and but like if we do get the 1 day bounce, or if we get a 2 day bounce, that doesn't really it doesn't it's not gonna mark the low either. You have to keep that thing in mind. So if we go back to the daily chart, we go back to the daily read here. That's a 31% swing right there from on the daily on the weekly was 8 weeks, right? But on a daily from 69.93 is down to this is 31 days. This is days now, 9.1. So the thing is, like, I was looking at this thing yesterday as well. So we're down to 31 days on this swing as of yesterday close. We haven't had 31 until here, until April low. This is exactly where this thing is starting to look. You see right there, where this one went to 33. So at 31 is of yesterday close. So if we take 32, that will be Monday. So if we take 33, that will be Tuesday. So that will mark the end of the month and the quarter, right? Because we only have 2 days left to end this month. So this one was 9.1%. This one was 21.3%. That's double in size. But according to the time, because the market just because it has such a huge upside, it's not given back that fast. It's starting to accelerate here now, but it wasn't really given back that easily. Because this price right there has so much overlap. It's so difficult to count this thing as a five-way move. You have a massive overlap right there. You see these swings right there? That's huge. Like you just have a lot of price overlap. The C wave goes like this, you know? Same thing here to the upside as well, like this. I can just go like, see? So you don't have this overlap. You see like these extended runs, a little bit of a 1 day pullback and then goes up. It's the same thing happens to the downside when you accept, like when you're trying to label a five-way move, it has to look right. You can't just throw a C there because how are you going to count 5 waves to the downside? Show me. I like to see it. Yeah, this one has a lot of overlaps. This is why I was rather I'm trying to do it here on the on a 1 hour chart right there. This one makes sense because of the overlap. I know we had this little bit of a throw over here as well. Just I kind of like it. This is the pitchfork from the high to the first to the initial swing low to this high, and then the four goes. Now what you see here, you see what I do behind all the during the day. I watch price. There's nothing wrong with that. You don't have to be in the market all the time and just here goes the bell and I want to throw risk on the board every single day. That's just not trading. There's some days you just have to sit back and watch. So on this, so because this thing right there doesn't move, right? Unless you go like this or something, but that's not the point. The largest percentage, you just go off with the largest percentage retracements and stuff. So anyways, so you just take this low, the first initial low was projected from here, it gives you this fork, right? You can modify this thing. There are ones that could set it up just on exact on a log scale as well. Some won't. It just there's some ways that um so it just um, so you got so if you just leave the fork here, this is the way the price should stays in between these channels. So as you can see here, like if you would have drawn this and just left them, and then you see like the price came back here. Look at this low right there. And then we just got this bit of a pop from here. Because this one doesn't move. It's gonna stay here as is. And we're gonna keep them. Um, and and we'll see what kind of a reaction do we get over time from here. Now, what the thing that we have to notice now is that we have this is a 1 hour chart. So don't get too excited. Okay. The bigger the time frame is, better the read is. This is why I don't really post these things much because I'm always kind of moving this thing around. So we have this kind of a price action here from last like 4 or 5 hours of candles that they had a bit of a throw over here, the downside as you can see. So sooner or later, okay, in the next session, whatever, the price will mean revert, goes back inside the fork. So when you have a throwover like this, there's going to have a very high probability that you will eventually will see a reaction to the opposite side. Okay. So one is going to happen. Well, when we gonna see the swings and when price will start to resume back to the upside. Eventually it will. It's not going to go down forever. We all know that, right? So you're already down to the extreme max. So we're just gonna this one does kind of make I would rather go complex um with an ABC because of this overlap. I'm just not it's just you can't count this move a five-way move to the downside. It's gonna throw you off. So if you started off here as an A, okay, well, this is a three-way move. So right from the start, it's gonna stop you right there because you need five waves here to make a case of a one. Okay, that's a three-way move. Where's fourth wave here to label? So it just, I mean, this is a 378.6, another lower low, lower high, 78.6, down to another typical correction back, pull back to 50. You see, the fourth right there has an overlap with one. So none of those rules of a five-wave decline applies here because, as I said before, the price has a lot of overlap. Now, the thing is this, is that the market is willing to go into a much larger correction. Are we going to go up to a 15, 20% down drawdown? Okay. I mean, we need more data for that to make the case for it. That's going to be, it's going to be one thing. Second thing is this, that if we like say like are we going to stay down for an extended period of time, that's a different debate. That we're going to have to go full just as a W, look for some sort of an X, then look for another down in Y. So that could further goes out on time, and the price, you basically what you're trying to make in a case here is just making a huge massive um, correction to the downside instead of making a three here and say like eventually it will find a floor here and then just try and start working his way up, or we just make a three-wave swing back to the upside doing this way, and then we'll expect another Y to the downside, and then whenever that thing will settle, and then we'll eventually will reverse his course back up. Okay, so that's a different debate. I can't assume prices or cycles or dates and things like this. Okay, I mean, if you have the free time, yeah, you're free to do so. Because all we can do right now is what we see right there. Okay, and we trade what we see. I don't trade what I think. We can sit here and think anything we want. I know, I understand this from here to here, all chart is blank. How it's gonna get filled, nobody knows that. Okay, suppose we just take it day by day and see how it goes. So a larger
Perhaps we
correction.
can look at the leading index, like to get the clue. Is is small caps in a WXY also, or is it more of an impulsive down?
It's about this. I don't think they're.
The small caps were leading, not SPX in
It
the last
has.
6 months.
I do have this count here, but like if we look at the the initial decline, as I say, yesterday I was looking at those the year-to-date data. As Russell is just sitting flat, and I'm kind of surprised to see that is because when you have a higher inflation, like like expectations that the oil is going to put some, the small caps are the ones going to get hit the most. Okay, because of the fear right now. If it's all goes to here, so the fear goes all the way to all the the higher rates, and there's not, basically that is not going to be any rate cuts, right? Because of the oil impact and this and this. But at the same, but and the market rolling off and stuff, right? Look at the small caps, 1.24%. Even the fact that it has been down the same percentage range, though, keep that thing in mind. You see, like it things how price gets really interesting if you really dig down. Like, look at this. It still had a same 8 weeks drawdown of 11.4% compared to tech, 11.8, 8 weeks as well, right? So if you take this, you'd be thinking like, well, yeah, I mean, if we had this much of a swing right there, well, this one is down over 7%, this one is still only down 1%. You see? This market is resetting back to everything getting lined up. This is exactly what I see. Everything is getting lined up here. When this market is gonna rally all together, not the bullshit part when the value is up and growth is on the other side. Just those are just such a tough market to trade because it's all about the rotation, and we have this rotation here that we always track right there. This is the weekly picture right there. This is daily. Okay, so I'm watching this every single week, every day, how it is going. But now the thing is this: if the market does roll over, this is where the growth is. But look at where the Russell is. It's right behind it. So there's no point for like people like thinking like, oh, um, I should run after value stocks, and they're not moving. The only hedge right now in the market is being completely on the opposite side is the energy. Energy right now is the most crowded trade right now from the last 2, 3 weeks. Okay.
It's
So
crowded. It's crowded because it was only 3 to 4% of everybody's portfolio, and they realized they needed more. That's why it
yeah,
got crowded. People didn't own enough of it. That's what it is. So
yeah,
now
because nobody
whatever stock
predicted the
supply,
war,
yeah,
but nobody
yeah,
has
but people didn't have enough of it. Yeah.
because nobody has predicted this war. These are all the
Also,
energy
more,
stocks.
we mentioned this. Yeah.
These are all the energy stocks right here, right? So which one is leading the most? FANG 34, 23, 20, because I know they all move together. The energy and utility, these are the two sectors that the entire rotation shift is all going to happen at the same time. It's not the ones like the mags, like one is trying to outperform the other benchmark. That those are like a typical rotation, and then we're trying to find trades off like, okay, which way we can find from that. Those are like, whichever way they're going, which one, some of them are entering the weakening quadrant and some of them is holding strength. So those ones are much different way of the rotation, the usual rotation, the way it works. Some of them are taking a hit in the lagging quadrant and things like this. But the energy and the utilities are two, like these two sectors, they move together. So you in energy, you like go in energy. So there's the energy definitely has strength, but this move is it's I mean, I don't know how long it's gonna stay, but if you look at the XLE, right? The XLE is up 14 weeks in a row, right there. It has a 98.53% RSI and is up for 14 weeks. It's been running from here. So it was grinding up until the war broke and then it finally took off. So it's getting close to this extension here as well. Another point to go. It will exhaust itself. It's gonna make a mean. I'm actually thinking about buying some puts on this one. Do like a 60, 55. 60 or 55 put spread. Go out on time. Try to play this mean reversion, but I'll see if it's what my plan is to put a short this sucker back to this level. This one right there is you're not gonna go like that. There's no way. Uh-uh. I mean, like, anything can happen. I cannot guarantee anything, but you're not gonna crack this that easily. The 261.8 is the exhaustion point. There's I've seen market tops, S&P rolled over, Qs. I've seen many stocks. Just that's it. Almost the end. It's very difficult right now is to chase this move up from here. It's it's the same thing I'm trying to say about the the S&P as well. When you have sitting that kind of extreme read, I mean, yeah, I mean, if I Monday morning you buy a put and if the market can drop another 50, 60 points, yes, that's if you are doing if you had that kind of a trade setup, that's the one thing. But for a risk reward, like for risk point of view, just doesn't make sense. Is to buy the extreme and sell the extreme readings. You know, I'll pause. I mean, it's just the thing is this that there is a pretty good chance that the energy will hold up for some time because you have to look at this way that when you rally like this, you don't just come like this, you know? So the only debate right now is like, is the higher energy price will keep the pressure on the market. So we've been seeing the reaction so far, or how long it will continue. Well, we're just gonna take all the macros day by day and see how it goes. Because this kind of a melt up right there don't instantly reverse. And now, if you look at the gold, you know, gold has kind of starting to cool off. Gold, which had a monster run from here, right? So gold is starting to cool off a little bit. But that doesn't, I don't see that gold is like going like this. Yeah, it will it's time to it's gonna take some time. Now it's gonna absorb this run that it had since this 10 October 16. It's the same thing when when you had this market expansion like this, and then you just, you know, take a breather.
The tech selling just rotated off into energy because it's tech plus energy is the new paradigm. All tech needs energy. And then the war came along and put it into like stratosphere. But tech plus energy is what is now linked because all the
You
data
talking
center,
about
all
those data centers and stuff.
yes, yes. So tech and energy are linked. Whichever USA is going to provide cheaper energy than the rest of the world. That's the idea. It wants to take over the rest of the world, set the prices, and produce energy at the cheapest price between Canada, Venezuela, Western Hemisphere. That's his plan. So ultimately, yes, energy prices will get capped. We will get caps. So
Mhm.
that is a risk to producers here. I agree with you, but right now it's energy plus tech. That's what's going on.
Yeah.
But you're right, energy prices cannot keep going on forever because it kills the rest of the economy. So he will
Correct.
cap it.
It's
He
gonna
will
have a
cap it.
massive, yeah, it's gonna have a massive impact across the board because it's the number one cause that higher energy price leads to a higher inflation.
Yes, he will cap it. He will eventually put price controls on the producers or something else. He cannot do anything else. Yeah.
This
Yeah.
is what I've brought this thing and just to is to see that, I mean, it had a huge move. And so I was been watching last 2 weeks that, yeah, I mean, S&P selling off for 5 straight weeks, right? Meaning that it has a 5 consecutive lower closes to the downside. But here, this one just pretty much out of gas. It's not ripping to the upside, you know? Even the fact that it's up 76.24% year to date. Okay, it rallied 50% this month alone, but hasn't. But I mean, what are you looking to expect? The energy is gonna go like 200% or so? It's it's just. I mean, I understand that he's watching, his team is watching as well, and he's saying the same thing. Like, yeah, we have a couple more weeks, then this thing will done, and then the oil will drop, and there's gonna. I don't know what the plan. His plan is like, this is the most difficult thing, like about his um what the heck he's doing, what his plan is. Is he trying to drop the market now, like last year he did, and then try to run him toward the midterm? A midterm is in November. That's a long way out. Okay, so are we in? Are we in for another V-shaped reversal? It's totally possible. Anything can happen, you know? Anything can happen. This is getting extreme. It's gonna it will mean revert. Don't worry. It's not gonna rip that hard.
Yeah, well, let's see, because it's a single variable market, like you said. Oil goes up, market goes down. Oil comes down, market goes up. It's a single variable market.
Correct. It's
Well,
just
so yeah, we have
the
to
only
see what he does in
catalyst.
Iran. Yeah, what he does in Iran now. He has just a few days left to either get out of there or win it, you know. But if he goes ground invasion, I don't know. That can drag this on longer. Yeah. Those guys are also playing some kind of a game. They're also trying to
They're
force
all
him.
exactly, but at the same time, you have to look at this way. You want to send 5,000, 10,000 people. There are a million of them sitting waiting. Million. How can you fight 5,000 people against a million? Look at the cost of moving that many people to the other side of the world. It's not easy. It's, and look at the fortress that the country has. It is the most, I'm not trying to be a military expert here or something. Iran map, if you really look and study them, is the most difficult land to fight. That land is some sort of like a blessed, basically, because all the fortresses it has. It's not like that Afghanistan where you have those clear mountains and stuff. That's different. It's a different layout. This is has all the, with the ocean and with it just it's very, very hard. I hope it doesn't happen. I mean, it just, you know, just one man is running a show and he's gonna put thousands of troops' lives uh, by doing this. It's not a small country either. I mean, Iran is huge. They have like over, I don't know, 500,000 plus active military people. And they're saying clearly, like, well, if you wanted to do ground invasion, come closer. Like, we've been waiting for this for 20 years. I don't know. It
A
just,
little bit of politics, but I've been
of
reading. I
course,
read Martin Armstrong. I read Martin Armstrong. Do you know him?
no.
Okay, economics and military. He's been around for like 40 years. But the big thing he's saying is that essentially Israel got Trump into the war, and he thought that he could get a quick victory, so Trump went along with it. But now Israel I mean, Iran wants to make a deal. They want Netanyahu out. They don't feel it's not about Trump anymore. They're saying basically, Trump, you need to get Netanyahu out. That's the only security we will accept for the future. Or you go for it between Israel and America, go for it. Use their tech superiority to try to pin Iran down, which, like you're saying, is very, very hard and very protracted. That will cause a lot of pain for all of us, the whole
Yeah.
world. But so if they go for that, it's a whole pain, whole different ball game. The whole world has changed. If they don't go for that, then and he wants to make a deal with Iran, right now Iran is saying, get Netanyahu out. Netanyahu is done. Then we will make a deal. So that's basically the ball game from a geopolitics standpoint right now. Take a lot of pain or take less pain and get Netanyahu out and make a deal with Iran. Yeah, that's unfortunately that's where we are right now. Anyway, that's off the topic on the markets. Yeah.
Correct. It's just, the thing is like, Ev, there's so much fake news circulating on X day and night. Okay. And how much of it is censored, you know, because in the Middle East, nobody's allowed to make any videos and post them because there is a huge fine and you're going to end up going in a jail. That's one thing, right? So all the hit they're taking, hotels and all the places, right? Nobody's posting them. Nobody knows the real damage what's been happening over there. Iran is doing the same thing with the places that the one is getting hit. Okay, fine, yeah, war lost X amount of people. What kind of a damage they got, right? Same thing with Israel. Nobody's, like there's videos like there's a barrage of missiles are landing on this thing. This guy is like they got 5,000, 10,000 views on them. People are like enjoying, loving it that Israel is getting hit left and right, day and night. But nobody knows, like, okay, well, if those things are falling, where they're going, where people are. What, the entire country sitting in the bunkers now? Nobody's out anywhere. Like, where all those buildings are empty. Like it's just like it's so hard, you know, is to get the right exact figures because everything is censored. It's the same thing here. I mean, X is all been run by them, and yeah, they're not gonna show all the damages. There's like millions of people saying that Netanyahu is already dead. I'm pretty sure you saw that. He made a speech a couple days ago, and everybody believes like he has six fingers instead of five. They messed it up. He's wearing a mask or something. They're saying like he's already dead. It's just
No,
like
he isn't dead. No, he isn't dead. And the thing is,
this
when they
this
went into when they went into Gaza 1.5 years ago, that time Trump was told, don't go along with Netanyahu's plan because Netanyahu is not liked by other people, even including some Israelis don't like him. He's a big hawk. He wants to get rid of everybody in the Middle East. He's not He wants Israel to be very, very dominant, which is fine, but don't go with this guy. Get somebody else. Trump went along with it. So now he's committed. He's committed to this path unless he somehow ditches Netanyahu, which is hard. I mean,
oh,
UK, Russia. I mean, there's a lot of allies which of America which
nobody
said
wants to do this at
nobody
the
wants to do
first place. Okay, this is the entire NATO. Okay,
this.
has showed him a big middle finger.
Yes.
Okay, this is the fact, and he's been there for 1 month now. Not a single country. Okay, and he's like, I'm very disappointed with this and this. Okay, fine. Entire Europe says like, okay, this is you doing this because of Epstein files. Okay, you were on them, not us. So you deal with it. This is why there's like, why would we look at what Spain did yesterday? It's crazy. I mean, things are. I
Yeah,
mean,
that's what the thing
Pakistan
is.
is
Yeah,
Pakistan
yeah.
is stepping in. It's just that they're trying to calm this thing down. They say like, okay, at least we can help. There is one thing that Pakistan has advantage is because they're two Muslim countries. Okay, that so that thing counts. Iran listened to Pakistan. It's a neighboring country, right? We have no problem with Iran for centuries. 10 to 15% of population, of Pakistan is Shia people, is basically from Iran. Okay. I don't know. A lot of people don't know. You guys know about religion stuff and stuff. Number one Shia country in the world is Iraq. Okay. Second largest country in the world is Iran. Okay. Third majority Shia live in this entire world is in Pakistan because being a neighboring country. So there's two um, separation in Muslim, Shia and Sunni. Okay. So there are 2.4 billion Muslim people live in this world. It's the second largest religion after Christianity, Christians, okay? So it just, and this is what, so Pakistan always has, because it has a lot of Shia community that lives in Pakistan, okay? So they're not going to go after Iran because they're going to have a massive chaos in their own country for those 10, 15% population that's been only living there for decades, right? So they're the same kids, they're the same people who are serving in armed forces and everywhere else. Irani people are not like Cubans and Venezuelan people. They're very well educated people if you look at them. Okay. It's a 3,000-year-old empire, Persian Empire. Think about for a second. 3,000-year-old. We're 250-year-old country. And we're trying to dictate a 3,000-year-old regime. And we're only sitting with 250 years as of today. These people don't quit. Okay. That's one thing. Second thing is this, they're very hard to negotiate with. Okay. Third thing is this, these are the people have a history of fighting in cages. They'll die. They don't care. They'll fight till the end. They just don't give up. Okay. So if you read about the Persian history, 3,000 years, how they used to live and the fight and the wars they fought, this and this, these people have, they're the ones who fight in cages. Okay. So it is a very big underestimated move that the US has made, thinking that it is going to be an easy operation. It's not. It's been 1 month so far. Okay, and yeah, it can drag even more, and it can drag as long as as long as they want to drag. They've been preparing for this thing for 20 years. So don't, it's not a weak country. Country is full of resources, like, and other countries are China, and because they're relying on their oil, and they're not gonna go attack them. So country which is taking the most benefit right now is Russia anyway. So Putin is loving it. So it just, I mean, some politics I know is just, it gets on everybody's nerves, and everybody has different opinions and things like this. But don't underestimate that country though. So Pakistan is trying to help, say like, hey, the world is gonna get is shaken out right now over this war. Let's talk this thing through. Let's sit down. That's why their army chief is a pretty powerful guy over there, in Pakistan. So Trump is pretty good with him. So let's see if they can come, meet somewhere in the middle, and now they're literally saying like all the damage that you caused, you got to give us the money. They're literally saying that. And at the same time, they're saying like, yeah, all these ships is gonna pass through it. They're gonna pay the toll. I mean, look, I don't think there's anything wrong with that. You bring every port in the world, okay, will charge you money for it. Go to Panama port. Well, you just gonna take a ship over there, and they're not gonna charge you? They're saying 2 million per when the ship is gonna is gonna, cross the choke point. So each month, okay, they're saying that there is 3,000 to 4,200 ships pass through that choke point every month. So you do the math now with 2 million per ship, how much they will make um, each month. Well, they're gonna recover the damage one way or another. I mean, you have to think it this way. So you blowing like we're blowing everything up over there. Okay, well, yeah, they can sell oil. You have all the sanctions there. Inflation is so damn high in Iran, right? So they have to make up the money some one way or another. So see, they're playing the same game as well. That's why the pressure is on. They know. Hold the choke point, and yeah, the world is gonna choke. And yeah, we've seen that. So we're spending billions of dollars, 1 billion a day on this war for 1 month. That's almost what, $30 billion so far. And we're wiping out trillions off the market cap. So 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 who's actually paying a price for it? And how many people are I went to a gas station 2 days ago, full of my the gas in the car. Fucking $62. Yeah, I was like, damn. It was like I remember from a couple weeks ago, it was like 42, $43. And I put mid grade, not the very lowest one, not the very high, like the one in the middle. I always use that. It was like 540 or something per gallon. Yeah, trillions gets wiped off from the stock market, billions you spending per day on this war. Okay, well, you want to continue that thing? We'll see how long it's gonna go. You can't even fix the freaking roads here in our country. They're all falling apart, all the bridges and stuff. Look at our trains and stuff. It's a joke. Um, Look at what are we gonna do? Rotation. Cabin energy is mad, freaking crazy. What energy is holding? It's gonna take that curve. Is when you're gonna see this energy will kind of cool off. Not, I mean, financials, materials, consumer. You see, like there's some. I mean, it's the most important one right there. See, this is where the leaders are, you know? So, tech, consumer discretionary, financials. I'm starting to see this right there. It's too early, you know? So there is a sign this week. So I'm gonna, if the next couple I'm watching, I mean, just don't have anything good that I like. Financials are the one that I'm gonna attack first. So communication is definitely showing some much better relative strength, not the way Meta is puking. Um, but it's just a drag across the board, you know? They just want to make sure the Q1, okay, that we're just gonna end in 2 days, is gonna close in red. Like they want to make sure that every Mag 7 stock, is gonna close down the way they are. You see? Apple 8.48, Tesla 19 and a half, Nvidia 10, Netflix is flat. Um, Microsoft 26, Meta 20, 12, 13. So it's not gonna change anything is gonna change much in the next 2 days anyway. So if you do get the bounce as well, It's not really gonna get changed. So you basically what we see here is what is the one of Q1, okay, and this month is just basically will be down across the board, you know. So they're not really. I mean, we could we will definitely gonna show up the energy stocks, the ones how they're doing. So I'm gonna do percentage. So say, I mean, XOM, the energy is the one is always gonna be the ConocoPhillips is the one is leading the 100 club, and ExxonMobil, CVX, Chevron, Lockheed Martin, Verizon, Target, Deere, Caterpillar, FedEx. So basically, what is basically the year so far is about energy, which we all know, right? And industrial. So we have this. These are all industrial stocks. FedEx, Caterpillar, John Deere. And then we have some this material. Honey, Costco is 14, Duke Energy 10, you know? So, but the thing is this, it's just more like the names that we see, they're up, let's say, calculate like the ones that up over 10%. The 10% which start basically from Walmart on the way up here, right? So then from here, if we look at a stocks, there are less than 10% are here, Pepsi's and stuff, Netflix is. So the flat line starts basically from McDonald's from here. So the from McDonald's, Netflix, the Bank of like the all the financial stuff. Now you see like consumer discretionary financials, all these stocks which we just looked at the rotation is not there. AbbVie is right there. Just played a little small pop on that AbbVie, then we just got closed it. Like screw that. That I'm out. That was just a small swing that I took on Eli Lilly's 18, Disney 18, Nike 19. It's freaking Palantir 19, Tesla 19, ISRG. Like these, like Meta 20. Like now we're going into a 20. So the worst one is this. I got the ServiceNow, Adobe. See, all the software names are sitting all the way to the bottom of the list. See, Accenture, Oracle, Salesforce, Adobe, ServiceNow, and this one. So the software names are the ones that getting hit the most, as we all know that the real actual sell-off triggered from the software names, right? So they're on the bottom of the list. So including the Microsoft right now, because Microsoft is definitely acting as a software names as well with the rest of them. So these are the ones I check mark them. So it will eliminate the other ones. So we just focus on this badge is the one that actually down for the year. Okay. So, so the Oracle is right there. See, look at that curve. Fucking thing is dead money. Yeah, that's such a I mean, the only good sign for this, okay, is because this is sitting so far out away from the benchmark. It's gonna take a pretty wide rotation. And it's gonna take time. Let's just put it this way. Okay. So anything that we see in here, all these big names, right? They're all gonna turn. So instead of pressing trades now, there's been saying, I don't know how much you size up trades, so just keep it low, okay? Just keep trades low to the upside. We'll play out, try to play the upside, okay? The oversold bounces of this and this, but don't oversize trades yet. Okay, once they will turn, so I'm gonna buy a bunch of these names. Okay, so I'm gonna, we're just not there yet. These are all the heavy names that I'm gonna buy for sure. So in the meantime, I'm just gonna, I haven't really bought anything, you know. So just doing these regular swing trades. So I just couple those butterflies and stuff, and just try to keep it low. I mean, not throwing bunch of trades all in one shot. I'm not trying to attack the market every single day either. Yesterday I was just sitting back. The day before, was holding back. Didn't really do much. So just gotta watch and see. Market is not going anywhere. I'm not going anywhere. It's not the very first time we have ever seen this dip. We just went through it. This rotation just it's gonna take a little time. That's all it is, and it's gonna we need this confirmation. This is the whole stock market. Look at freaking energy. Jeez. Ripping on the upside. Materials, real estate is flat. And then consumer discretionary, see, down 10 right there. This market is definitely, I mean, if I know, I mean, I know, I don't know, but I cannot predict the curve, right? When the momentum will pick up. That based is all based on the money flow. This market is looking for a pretty wild run in toward the midterm. Just keep that thing in mind. Because this rotation, what you see in here as of yesterday, okay, is not going to stay here for another 4 or 5 months. Okay. Because remember, we looked this thing last week. You see, this was the Christmas was, right? And this is where the tech started the year. Right at this point, right there. That's where we started the year. So it's been what, 3 months now. So here goes January 30th. It trying to make the move. Failed. February. And here's March. Right? So we'll see what the April will go and when this rotation will improve. And I know that this is where I'm gonna have a lot of well, it's gonna I I've my client's account that I manage that I'm gonna be buying almost at least I'm gonna deploy almost like $2 million. So I'm trying to make a list of stocks that how much that I'm gonna put them toward those shares. So not option trades; those are just shares, stocks that I'm gonna buy. So I'm just gonna diversify several stocks into that $2 million figure. So it will, 70,000 on this one, 150,000 on another one. It's just like that kind of that's how you just spread them around. So um the rest is just we just need a scan because the scanner right now is dead, basically. It's been dead. I know it's tough to fight this thing. S&P is the wall I do. This is what I do every single day. It's nothing. Apple definitely showing See, 18 stocks is just not gonna do much. And we've been doing this every single week. Yeah, we need 60 plus list here. That's how when the market breadth improves, okay, that's when the rotation is gonna light up. It's only these names right now. We have confirmed um, the rotation. Datadog, Rooper, HP, GoDaddy. But it just this doesn't mean that this is it. I mean, you got JP Morgan Chase, MasterCard, Visa, always gonna work the same. MetLife, Apple is just cutting too close to the benchmark, and plus with like Apple was just trying to pull back a little bit, but Edward side is almost. We just need to find something here which has always gonna have more alpha, right? We don't get too close here to the line. So this is just this is it for the whole week, you know? So you just not I'm not trading this sucker, man. This freaking stock last time I took that trade was so damn punishment. I'm watching this one. I'm kind of interested in this one. This CEG, this one, this consultation energy. So I like this one. I might take a shot at this one on Monday if you can remind me. You see rotation right there, trying to improve. So remind me this on Monday if I won't forget. You see, weekly swing is up as well, has a buy signal, but it ended the week with the inside week. So these are the things that I like to see before I take a shot. Rotation confirms. You come to the swing. That's where your structure is. Signal confirms. You just that's these are the positive that I take. Before deploying I mean, it can fail, of course, but at least, well, I mean, I can see, rotation at least is showing positivity, momentum is picking up over there. Swing swing direction is up, buy signal is in. I mean, these are the trades I love to take. It's just to see if he could try to make his way up. So that swing is up on this one anyways. You have to remember this. Once you turn the 3 bar swing up, it doesn't instantly reverses back down. So you always remember that. You don't just rally it for 3 weeks and just comes down. It can happen if it gets hit with the earnings or something, you know. But but a usually stock, they don't just instantly give. You don't just go up 3 and come down 3. you know, unless you get a surprise on earnings with some sort of a massive hit that stock will take, yes, a different thing. But on a week-to-week basis, no, you don't do that. Same thing with the S&P. S&P flip the swing, it's gonna hold. It's gonna try to run its course. So, yeah, I like this one. Kind of looked at them yesterday. Look at that, man. Wow. The 61.8 almost to the penny. Look at that low. 277.87. Look at the fib 61.8, 277.87. That's a beauty right there. Yeah, this one right there, if this rotation right there would improve. Oops. Right there, see? It's a confirmed rotation because it picks up on a scanner. And then this move higher. So these are but this, okay, one name, what else about the other ones? You go to JP Morgan Chase, and it's sitting right at the bottom of the cycle. It's showing, I mean, RSI is at 30. Got hit here with a sell signal. Just got 2 time signal here. Am I putting some sort of a bottom in? We
So
still
the
be
indices have overlapping moves, but the individual stocks have no overlapping moves.
Hmm.
Is it because of rotation?
Yeah, all about rotation. This market is lining up now. That's what that's what I was trying to make the point before. You know, what is the weekly? This I really like this. This is gonna this when we would have the broad rally. Okay, it's gonna be because you see right now everything is coming down all at once on time and price. They're all getting lined up. Okay, and once we will rally, everything will rally at the same time. You know, so it's the same thing. You see, like this swing right there lasted 44 weeks. This swing lasted only 9 weeks. This one only lasted 10 weeks. This was 10. You see, well, this one always gonna work side by side, anyways. Okay, so you always gotta have to remember you can't just go off too much of these two. See, 10 up, 10 up. This was 7.4, this was 9.6. So you're always gonna have more on the cues, of course, because of the tech, right? So when you have a dip to the downside, it's gonna have a more decline as well. This one was 3 weeks down, 8.8, 3 weeks down, 5.8. So you just look at them side by side. Like these the price. Yeah, these are very key, important things you have to pay attention to. Okay, swings are very best way to look at the price on a chart. That's what we call the real structure right there. It calculates everything: high, low, time, and price. And we know what the swing high is. We know what the swing low is, which is basically always going to be the previous swing. And we know what where the high is and where the low is, and then the price is right here. So now the question right now for the bullish case is to see if the price makes a higher high or it reverses on you, makes a lower low. That's how simple it is. It doesn't, that's why I'm not always dying to label these things left and right. I know some of you are kind of obsessed with it. I just, like if you look at the drawdown here, which was 5 weeks, 9.4. This was 8 weeks, 11.4. You see, like this is exceeding in time and price. So you always look at what the previous dip was, because what happened after that? The price ended up making a higher high. You see, had a 19 weeks run, 5 weeks of setback, and then 9 weeks of a rally. So you always have to measure two things. You swing low and then you swing high. Your swing high has to exceed in time and price. Because if it fell short, it has going to have a very high chance to roll over. Because it has to exceed. Your upside is always going to be greater, more than your downside. If the market comes down 15%, market doesn't just go up 15%. It's going to go up 20+%. Okay, it's all the upside is always going to be greater than your downside. Always. It's been this way. That's why it's by definition that people makes more money on the bull thesis than the bear case. It's a proven fact. I'm not trying to be like, yeah, I mean, we as a trader, we wants to catch every turn in the market. Oh, market peaks. Okay, we want to buy puts. Okay, here goes the bottom. I want to buy call. We're just trying to predict and trying to just like mapping out the whole thing, saying like, oh yeah, the low is in, high is in. Yeah, this is where the low is gonna get formed. April, the low, and like these kind of like full like road, like you're like an air traffic controller sitting like trying to see like which plane is going where. Well, look at the screen; it's right in front of you. Will tell you which plane is going where. But people predict things. This prediction is a very tough calls to make. It can't, it will, we'll get there, we'll do this. Okay. When price makes a higher high, well, okay, yeah, there, then we have the expansion mode right there. You just project upside. But there's one thing that I would, that, that I don't know, we're just coming to the end of Q1, is one to remember is one, is this the Qs is the only one, the XLK and the NASDAQ has not made a new high this year, you know, because it's just, I don't believe that, that any such a trend has ever topped out of the double top. Okay. The S&P made a new high. Diamonds made a new high. IWM made a new high. You see? Semis, new high. Now, XLK didn't make a new high. QQQ, double top, no high. NASDAQ, double top, no new high. So the only, my point now is that even the fact, okay, if you do make this thing a diagonal to close this thing as a five-way move, you cannot even call this a diagonal because diagonal never truncate to the upside. Okay, diagonal can overshoot, okay, but they don't get to see a truncation. This part right there, you cannot complete a five-way move like this. It's a little tricky right now with Elliott, to be honest. But the point at the same time, the point is it still a four? This is a massive four now compared to this two. It would have been a triangle like this, yes. But look how much is expanding to the sideways, like going to the side. That's a tough one, seriously, with Elliott to make the case. Unless you go like this, okay, and you put a three here, then you can make a case of a four like this. You put a third here instead of here. So if you do that, okay, then it's a tough make. It's Elliott is a little tough, tricky right now because you have a double top. Let me just go back here to the chart. I'm looking at them and just like here, you see? I mean, here's one, here's two, because the upside when you use a channel technique that Elliott has, that you connect one with three to and then you project it from the wave two, it's just you don't have that. I mean, this unless this thing will make some massive reversal to the upside, that's a different case to make, right? But it's this is a tough read. So 2 hours or 1 hour, it really the daily is not gonna really change much. Okay, this is a 6 hour chart. I put 2 hours here. So it's similar to daily chart. I really don't wanna. I mean, unless we do this, it looks okay, but we're gonna have to read. You see, you can do this, but the thing is this, it's gonna be a tough to find. You see, you cannot make this thing a diagonal because there's a truncation here. You know, this is a little tough read. You can't close this top with the diagonal, and this thing right there is a perfect diagonal, but it has truncation. So your rule's gonna it goes off the window. So take it easy on the Elliott wave, to be honest. Just focus on I will adjust once we'll have a little bit more, um, a bit more price clarity. But right now we don't. Okay. I mean, the only way to do this is to either go like this as a 1-2. The only way I see it. Get rid of all this. Throw this thing up. This. Much better, cleaner look. Okay. And makes sense. You can't close a fifth here. Truncation happens, okay, but that truncation doesn't happen at diagonal. Just remember that. A five-way move, yes, once in a while. And this is not something. It's not. It's not very common either. It's very truncations are very rare. So if we go 3 versus 1, something like this, there you go. I'm gonna try. Yeah. So we could do this. This is the same thing that this guy is showing me last night. But WXY here is the one that makes sense because of this choppy move. So what we have here, we have a double top. Then you draw a rotation. That was the pivot, right? 580. So that will act as a resistance now. And we have this, right? And then our major support all the way down here to 540. Which is not that far anyways. So that's the window right there. So we could do this. Um, Here, we can do 2 versus 2. There you go. That's our zone for this thing. So you can't even draw a channel because the channel is going to go sideways. See? So it's a pretty long compression. I mean, I know things are worse, but I think this is a false break here. We'll make a mean reversion back to the upside. There you go. It's gone pretty darn close as well on time. It will change. April 3rd is where this meets. Price already met. It's just the time. So next couple days. This makes sense. It's hard kind of to make a fourth. It's just so damn, like this is over what, 4 months now? Let's see the, so we go off from October high to yesterday. That's what, 20, 205 bars. That's that's a long, that's a long way. Dude is so, he's so obsessed with that Elliot, Elliot, Elliot. Freaking do it. You don't want to entertain what I show all the time. Freaking sit and do the work. You know? If I four, I mean, everybody's picking up this. It's not this. They're saying like, yeah, the market could retest the this low. But that, I don't know. Can happen, might happen. We don't know that. Me as a trader, how I trade, what my approach is, I focus on cluster of zones. Okay. Price comes, falls down because it takes several swing high and lows. See, I'm taking a swing from here. I'm taking the larger swing. You know, I can take a swing between the existing swing. So I can take, that's how you form a cluster of fib, support, and resistance. Okay, that's what it's all about. Like, okay, when the price does come toward this zone, how does it react? You know, when you have a strong fib, they're all starting to stack really, really close. That's the area that we really watch real closely to see how the price will react as soon as it's gonna come down to that test zone. You don't just really slice through it, but it's like sitting with like going to 700 and this and I mean, I don't, yeah, we're gonna, when you going up, I will run the same projections to the upside. You know, he just looks around too much. That's the thing. It just confused the hell out of you. You know, just looking at like one guy posted this, other guy showing some cycle, thinking like, yeah, the market is like cycle is it. Like all you're doing is like, oh, you were just like literally frying your brain. You know, this is Elliot, right? I can show you a swing. I can show you this. I can show you, I can like literally exhaust you. Okay. You're gonna be saying like, Mo, what the fuck? Like, come on. All we trying to see where we can potentially buy something, but you're trying to show me 10,000 things. Keep it simple. It's much easier to see it that way. I mean, this is all labeling. You see, like you can change, you have to think like, what should we do? Then the rules has to be applied right. Like the overall wave count has to look good. But the point, the main point comes in the end is this 560 looks different than this 560. This is the part that I wanted to understand. Why this 560 right there look any different than this 560 price? It's the same, right? So this measure, this length right there is the same length is here. The same thing, 536.60 down to this. It's the same exact thing here on a wave count. But most of you guys are sitting like, oh, this is an A, this is a B, is it a C? Are we gonna go up in a three wave? Then we come down in three. Like just like making like a full roadmap. Like, like just like a constructor builder or something. Like if this highway is gonna go here, this highway is gonna connect with this one, then we're gonna make a bridge. Like these kind of a things, kind of a little annoying to be honest. There's few times he asked me to do, I don't even respond. I was like, I don't have time for this. I'm in the middle of a session trying to analyze the market, trying to see what is moving, what is not moving, see what the risk is doing, things like that. I'm gonna sit down and make charts because you decided to open a position in a certain chart. Well, you can wait. It's not gonna happen. I got so much work to do during the day. It's just not like market opens and I want to throw trades left and right. I mean, there are days, time that you just gotta sit back and just to see like, okay, what is going on? Market is getting bombarded with news every single day. You know, yesterday we looked at them like $7 million order um, on the SPY. You know, everybody's like, people commenting like Baron did it, Baron went long, Dad is gonna go taco over the weekend, this and that. Yeah, 700 call, 821 expiration, $4.3 million. That was the flow yesterday. The Baron is betting that his dad will taco over the weekend. Like these kind of a things are just like, just order flow is the last thing anyways. Everything is rotation first, structure second, order flow third. So that can an order flow cannot be first. Um, on the S&P, we're doing this. I was playing around with this one, so we should just. I mean, you can make it fit, but it's you can make the fourth work here because it has chewed a lot less time compared to the Qs. Remember? Because this one made a higher high, plus this one you can well define a diagonal here, right? On the Qs you cannot. So it's a little off right now. So it's gonna take some time to adjust this thing. See the same lows, you got one, two, up in three, down in four, and you have a diagonal five. And then you got this little choppy decline coming down in WXY. So we're right down here toward this cluster of fib support on the S&P right there between 648. Yesterday we tagged 663.48 to the penny, which is the 61.8, a pretty strong fib. Plus you have 261.8 is sitting. Plus you have 23.6% sit. So this is a zone that I was watching yesterday. So I didn't really do much, but it just I'm trying to take the same. I'll adjust this, but I'm trying to count this on a 1 hour time frame first. I could take that piece from here and then adjust it here. But I'm not going to be dancing around and moving these things left and right every single day. I'm just taking this high, which is the all-time high, to the low on this. So once the 1 hour gives you a pretty decent read, and then once 1 hour starting to show some reaction, and then I can just fully adjust this one. But for now, I mean, I'm just using these external retracements and stuff, which you don't get them here because I'm only running internal swings. This is a full roadmap coming down from this low. So that one is going to give you more fibs, okay? More zones clustered, the cluster of zones that you can build on a higher time frame. So just to click back and forth is not daily, is still going to be a one single session. Here we're going to have 6, 7, 8 bars for the whole day. So, so I kind of move just to keep an eye on it to see how we could make what to make out of this decline. But then the question comes in, are we in for a larger decline, larger like meaning a larger setback, well, the future will tell. Okay, I don't know that yet, but for now, I mean, we have the same 540, I believe, on this high, that where the rollover was, and 6147 on this one. I mean, can we test it? Can we not? We don't know. I don't know that. I cannot give you that answer. We're not that far anyway. It's only going to take two more sessions. Two sessions, we're down. I mean, we're coming down 100 points every single day. It's like a freaking like a video game. So from 63, 68 down to 6147 is how much? 63, 68, 6147. That's 221. That's 221 based on a 100-point move. That's like two sessions. It'll only take two more sessions, right? So in this case right there, our resistance now is what, 65.21. And then we're sitting right at 63.48. So we tagged that thing yesterday. I mean, wasn't really a super aggressive close yesterday, but we'll see. I mean, we're at 5 week stretch. Are we gonna go for six? Well, we're gonna find out if we end up making a new low next week again. So that will mark the number six. Is that the number six candle can reverse? That could end the streak. But we'll see because Tuesday is the rebalancing month for the quarter. So there's a lot of activity happens on the rebalancing is where I was reading about there's like $12 billion worth of new pension money is gonna get poured into a market. So there's a lot of pension funds, and they make adjustments and stuff to their portfolios. So there's a lot of rebalancing happening in the end of quarter. So that's what my main point is. Plus, we have a short week, so we're losing one day as well. So end of the month, end of the quarter. Um, so plus we have a short week of trading. So we gotta be a little um just we'll see what happens. I mean, we're at the extreme low. Um, I'm basically sitting right at the April low reading on the RSI. I mean, the kind of a reaction do we get from here? That's what we're gonna find out. I mean, the bounce we're looking at from here, let's say at least to 65. So that's quite a bit of move. To catch 100 point, that's the big deal. If you're gonna catch, it's very hard, first of all. But to catch 100 point move, that's beautiful. That's really good. So that's roughly like a 10 point pop on the 9 point pop on the SPY, for the week. And any direction. Let's call it this way. Well, we did I don't know, I'm just gonna see because the only thing that, what I was gonna show you is the only reason that I held off for the last 2 days because I want to do another one uh, is this is we have it's called like the declining, you see the curve. It's not on the weekly. You see, you got the that full uptrend. We had a curve here down here as well. That's when we sell off. Remember in April. This is the first throwover that we saw yesterday. Okay, it tried here when the November low was, but we haven't got the full body close below this. But then at the same time, when you notice, okay, you see that it has that curve. When you have a curve, when a band like this, which was going up and starting to curve like this, that's the sign that the upside momentum is weakening. I mean, anything can happen, okay? But then when you come here to a weekly side, there's nothing here, okay? So even the fact that the market is down, it's set back like 9% or so from the high, right? This is why I'm more focused on a weekly read than a daily. So we did got a throw over here, you know? So we're right there at the bottom. This is the built-in tool from from Optima that gives you the extreme read, at the bottom. So this is the tool that it comes with the software. That doesn't predict bottoms and stuff, but this is the tool that gives you the mean reversions. You know, so all these black arrows that I just put it on, these are the mean reversions signals that you get to see on the chart. So you can just go further back as far as so anywhere. So some work, some don't. See, there's no such thing as a guarantee, that a guarantee those doesn't exist. You can get nice, decent pops, see, but if you look at their the overall, the results, that's pretty damn good, right? It didn't work out here. Didn't work. I mean, you got a 1 point, still got the pop, right? Because you still got a pretty decent upside. I mean, you can measure it from here. Still 3.8% upside. That's quite a bit of move, right? So it's not like, the point is not like nailing the bottom. Like no indicator is gonna give you a perfect bottom entry. That's what everybody wants, right? You gotta get the shakeout. You see the signal fire, next day shakes you out, and then for 3 days, and then it try to rip up. You know? So like the point is like, you see look how bottom forms. Multiple pop and fade. See? Double bottom right there. And look at the rally from here to here. You always pay attention how what price is doing when it reaches the certain low. Okay? Those are the moment on a price that comes to a real test. Now you just like because you so focus on just looking at the upside, you literally you have to look at the previous times, like what actually price does, like when it reaches to a certain point. Look right here, it runs out of gas, right? Look how many attempts it's trying to make. It doesn't make. See, it revert. It mean revert. Even the fact that it was out of the band, it mean revert back inside. It's just a matter of like being patient and wait for a couple more days to see what happens. It's gonna reach to a certain point, okay, and then we just have to wait for the reaction. So like, okay, it's gonna take a day, it's gonna take another day or two or three, it's gonna come back, retest it, gives you a false break, then reverse, you know? We just simply don't know. Like this case right there back in 2004, you see got signal fired here, next day made a new low, finally grind his way up. Another flush down, signal fired here. That's excellent reversal. So these are all signals that fires here. That's what that gives you a mean reversion right into this blue band, blue reading here, which is a negative read. See? So we're just looking far back, but see November low, you got one bounce, huge flush down, you see? And then you got the rip up. The same signal, see, like same one triggered here, back to new highs. So it works. Okay, it doesn't work like now where we at? It triggered here, made a new low, got the pop, faded. So these are those freaking three dojis. Remember we were right there. Remember I pointed this thing out? The one a triple doji. And this thing was happened last time, I believe, back in somewhere down here. I gotta script that. Where we find this? It's the same shakeout as two. Somewhere back here. I saw it on I think I see. I mean, this is a daily session, but there's something, it's the same thing. Three dojis, one low, and then the market ripped. It's hard to manualize it. That's why you have to code these charts. See if I have this thing saved. Yeah, let me do this. I think I have this thing saved. You have to code this thing. It's just very hard to. Yeah, I did this one. So this one, three consecutive dojis, absolute body side, open close, high and low, variable 3, 2, 0 percentage, three consecutive variable 6, 5, and 5 bracket column. Okay, there you go. The green one. He's gonna filter the whole thing. So there is the black one. So you have this. It happens here somewhere right now. Here, right there. You see what happens here? Three dojis, 2 days of a drawdown. And then from there, look at this, move up. So it can happen. Anything can happen. Now I just want to see. These are the things you see RSI here is down to 14.37. And we're sitting right now at 10, right? It's very rare, for the three dojis. This is where the energy builds. And you see it just kind of literally flushes out the weak hands. And then look at the move. I mean, anything can happen. Again, mean reversions on S&Ps are nasty. I will tell you that. To show you so many of them on a chart. I've studied S&P chart for decades. I pay attention a lot of stuff when it comes to S&P especially. It tracks it down to the freaking last bone, if you can say it. You see, like, it happens here. There's three dojis here, but this one ripped up. See right there, three of them. Very small body reaction, but again, you just had the continuation. It wasn't sold off, like it was already up in a strong uptrend. Happens here. See, it's very rare. See, this happens all the way to the uptrend. This is like a loss of momentum right there. You see, buyers and sellers again are super aggressive over the run like this. See, it doesn't happen that often. Like since 1950, that's 1950 right there. 1, 2, 3, 4, 5, 6, 7, 8, 9. That's 9 times that's ever happened in the entire S&P chart. That S&P had three dojis side by side in a daily chart. You see? This is the beauty of, like, if you know how to write scripts, it's just to identify a pattern like this, because these are very rare occasions that the market will ever do that. Your 3 days is gonna pass by, and you have buyers and sellers like choking each other every single day. When you just need to look for a reaction, and the reaction was to the downside, obviously, because everything is just so bad right now that it's just gonna get worse and worse. So that's the three dojis right there. Yeah, I'm due I'm for a bounce. That's at least this gonna be the major move to here. Our band mid is 66.87. So any mean reversion that usually attack the middle mid band. So that's would be the, I don't know how it's gonna go when, so that would be, I wouldn't, you see, like, we're losing that 7,000. You see how, because it's down. You see? Now, in order to make the case for that 7,000, you need a monster overthrow. So that's a tough bet to make. If this selling kind of take a little bit of a pause, yeah, I don't mind start putting butterflies here. You know, and my IV is already elevated. I think the best way is to keep attacking these butterflies. We did, and I mean, I can't just close one, open another one, close one. You can't do like this. That's what my plan. That's what I was watching. So I'm just because the band is kind of. This is how I built one. So just let's see how Monday or Tuesday goes, and then I will set one up for next 2, 3 weeks. You know, Shorter time is always ideal. Just keep that thing in mind. Because we're trying to. It's always going to have a much faster decay. But the thing is this, that if you go out on 1 week and then you get like a 200-point sell-off, yeah, you're gonna get hurt. So it's rather do 15, 16 days or so on a SPY, just to kind of give a little bit of a room, throw some, keep the delta flat, theta positive, and just each day we just collect time. Not to hold all the way up, but week and a half, week and a half, collect enough time, close it, open another one. Yeah, you can make a pretty good income out of it, just to burn time. So let's see, because I wanna. So I watch this, and this is really see, the POC is a 65, 68 on the S&P, a point of control. This one is a 67. So that's the upside mark. Point of control is a 65, 68. One standard deviation, two standard deviation move. This is a second profile, a 67, 11. You see, I wouldn't go back to this because this is the band that is coming down. This is what I need to to structure a butterfly. A market profile with the band. That's all I need. This way, kind of, because market profile is where you try to center the body, you know. But let's wait another day or two. Let me see how it goes, and we'll make another one. Okay. No, weekly is good. I mean, I know it's pulling back. These are the one I was gonna shoot. This one. These are the most accurate because this is based on a close, so you don't have those fake high and lows, you know, on a candle that pops every single day. This is just based on a close. Okay. So this is a very important line chart that you should always um, pay attention to. You know, I mean, where are we at? 63, 68. We had a throwover 64, 67, correct? So we got a close yesterday 63, 68. This one right there on the weekly, we are down to 62.17. Okay, right there. And then on a monthly, mid is at 61.59. So if you notice, what you notice here is we have a thrower here that is due for a mean revert. So we have a top that, you know, those golden signals that these are the time signals, okay, when the upside will exhaust for a turn down. So that was the upside here. This is why I put that butterfly in. Remember the trade that I did on the downside? Then I end up putting one on the upside, the calls, but we closed. Glad I closed that call. That call that would have just freaking went to zero probably right now. Um, then I just held the put one, and because I was trying to play around here to see if we could get the move higher in case, but that didn't happen. So now, as yesterday at the close, I got this. Okay. So we'll see. I mean, this is the big picture right there. So as of yesterday, this is a daily chart. So you have to, look and see, like it triggered here yesterday. So that's when the top, these are time signals. So this one triggered here, that one triggered here, right? They got a little bit of a dip, then price went back up. This one, the April low, right there. So the point is this, okay? Now let's say you this one triggered on this day. So you had a price of 5,069, correct? And then the price from here down to 49.82. So what does that tell you basically? So you had a one more flush to the downside, right? So the point now is this, that if you do buy something, let's say you go out 6 months on time, right? when the signal fires at the bottom. So if you go out in 6 months, you take a punishment for one more session down because you took another dip of 100 points. That 100 points in a SPY probably like another 9 points or so, correct? So if you out 6 months, let's say 8 months you go out, you don't want to pay too much front end volatility if you further go out and make a spread, right? Try to offset some of the volatility. You think you would have made money on this? And when you have that much time and when the signal when this signal triggers on the bottom, I mean you could have catch a 20 point move. You're giving back 8 9 points to start off because it took another leg down. But look how it mean reward back inside the band. That's your point is to see when you get the overthrow, when the time signal triggers, how many more days does it take for the price to mean revert back inside? Price will mean revert. Price just not constantly be trading out of the band. And it happens as you can see how many times. Throw over, back inside. See, throw over here, inside. Get another throw over, and back inside. Yeah, it takes days, weeks. See, get throw over, mean revert back inside. Basically, what you're looking for is when the signal triggers, right? Even with the throw over or whatever the thing is, how the price reverse comes right back and hit the green line. The green line is where you wanted to target. That's your midpoint. Okay, so the price when the price mean revert, this is where the price usually goes. It could take week, it could take a couple days, it could take 2 3 weeks. So same thing from the top as well, right? Overthrow, signal triggers, see, right there. So it's not we don't want. I mean, we don't know that is going to happen. But the point at that time when the price is sitting around here, what I'm looking for is to see like, okay, well, I can see the price had a throw over. It's out of the band. How many more days that's is gonna come is gonna hug this. It's gonna hit this number right there. We're trying to catch this move. You see it dip down, but if we don't know what's gonna happen after that, it came back touch the lower band. See from here, there again. Further extensions, those are all good. Okay. But for now, for me, when I look at this, I want to target this 66.87 kind of, down doesn't have to be round 60, like call like 66 and a half. If I want to round it off, call like 66. If any upside from 66 you get, you're always a hero. But go round it off to 66. Say like, okay, fine. I have a 66.87. I will see if I can target a 6600 strike. So if any mean revert would happen next couple days, week and a half, that will be the upside minimum target. But in order to get to the 66, it's going to face resistance here at 65. 65 and 66, that's the zone for the upside right there. Okay, so you build zones first, then you structure a butterfly in there. That's how you do it. But I need a band to do that, and then I throw a market profile on top of it to see where the most the block of orders, the buyers and the the point of control is. That's where you have the massive, huge blocks, the yellow line. So when the price just make a 1 or 2 standard deviation move to the upside or to the downside in the market profile, that's where the price mean revert back to the point of control. It's the same thing. I don't know if you ever played that game Tetris. You build blocks. So it's the same concept here. You're just looking for the most blocks. That's what the POC is. Let's see what happens. If there is downside, I think is 61, 60, 62, and we at 63, 68. I mean, another 150 points or so, give or take. that will throw us right to the bottom of the band, so that's gonna be another one or two down sessions. Call it like, if we go another week of a drawdown. But it's damn hard to position this, you know, because what because the thing is this: when you have this much of a down the activity, like when you have this kind of an extreme move to the downside where seller gets so aggressive, I mean, most of the time when you shifting everywhere, this one market does the opposite. Because because the way out the the IV is right now is elevated with these premiums and stuff. If you get like a 60, 70 point pop on the market, those shorts gonna get hit hard, you know, because of the IV. So we'll see. Pretty good idea, but yeah, I mean, making a case here for this to 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 time this whole thing further out, right? We need a massive reset here. Okay. I mean, daily is yes. There's nothing going on weekly and monthly, anyways. So, you know, so I'm not gonna entertain that much larger correction that will go into a full complex mode for the next several months. In first, I need to see the curve here in order to make that case. You know, that's just further down the road. But on a week to week basis, we'll watch and see how market trades and how it react, how it respond. I mean, if right now, I mean, I can only see things where it stands, where it will go. I mean, I don't know that. But the point is that I'm trying to make here is like, if you want to do this or do this, whatever the case is, this part right there, okay, it has to adjust with the cycle first, okay, to make that case. Yeah, you can't shift a price like this because we already have a throwover right now, anyways. Okay, so we have a throwover on the pitchfork. We have a throwover on a cycle. We have a throwover, and we're right down to this zone. Okay, so we'll see. We'll see. I didn't buy anything yesterday. I mean, just whatever is open. But if I if this thing can take a little bit of a pause, but what we can do is I would structure a butterfly here to this, oops, to this 60s. That's what I'm gonna build this. Let's do this right there, this area, and then just try. I don't know what the low is. Okay, I don't want to go up too high. I'll tilt it just a little bit to get some some upside delta, you know. Um, and then just try to buy something here, and then I can always adjust it. Yeah, so like it's gonna be a little bit. I mean, right because right now we gotta go down one call in the money, so it's not gonna be that like it's not gonna be that cheap, with the premium, something like this, just to chew some time here, get some, make a couple thousand and close it. That's the, and if the price does move higher, but we don't have, I need more confirmation. Okay. So an over a throwover, yes, you can. This would be the zone here. I would make a case for a next butterfly move right around this kind of area. And if the price managed to go out, well, the mean revert will always come into a place one way or another. And butterflies are much easier to adjust. You can do another order. I can open more upside. I can open more downside. It's always butterflies are much easier. So yeah, give it another day or two. Then I'm gonna make another one. My plan is directional bets will take one if anything looks good, but I think the money to be made in this market right now is more into a butterfly by selling premiums. Directional bets are a little challenging right now. Plus, the freaking rotation and the market breadth sucks. Look at it yesterday. So the 391 decliners, 109 advance. So when you have a market breadth like I post this thing every day after the close. Yeah, when you have a market breadth like this, it just means your rotation just not gonna improve. You know, just you need market breadth to improve, rotation improve, signal is gonna fire. It's gonna happen. Come on, it just I know it's you know piss you off, and I get irritated as well, to be honest. But what can we do? It's not fun, you know. But we've been this road before. I mean, there's absolutely nothing new to it. But the only thing is this: the people just forget because they caught this move up. You know, any 10% dip in the market is gonna shake your portfolio. It's just a fact. You know, and this is not the first or a last 10% dip that we ever gonna experience or ever gonna see. This is a very, very good chart. I finally came across, was like looking at them yesterday. I want to take out, I wanted to go back to the major, larger swing, and I wanted to see like what the heck is going on over the years so far. Even the fact that we have so many melt ups, and that's what I started making them yesterday. You know, so I was like, wait a second. I was like, we're just literally repeating 40 weeks drawdown over and over again. This is the third time it happened, you know? So this is nothing new. So then I'm start thinking, I was like, can we be what, 10%, 10 and a half, like another percentage. If we're already down 9.2, okay, what do you think another 1% is going to do? What do you think is going to another percent or two is going to do? We're already down this much for 5 weeks. So we'll make a case for another 6 weeks for another what percent, another percent and a half. Yeah, a lot of people always curious about selling market tops. I mean, hey, if we would position the next move in the next whenever this thing was already happened now, let's say in the next 40-week move, like I could especially like go out and just instead of taking a directional, I can just do a butterfly more tilted more to the downside, just to stay theta positive and just leave it on the board. I mean, if it's happened 3 weeks in a row, I mean, 3 times in a row, it's a pretty damn good cycle. It's just market, it's keep correcting after every 40 weeks. You really pay attention to this. What exactly the market has been doing for the last 4 years since we had a bear market low. That's the thing you just have to ask and think, you know? Talking about the perfect timing. Well, there it is, right in front of you, right in front of you. It's pretty damn good. How it's all, they're all lined up. So, I mean, these are the things that have to sit and think with a clear head is to come up with these kind of a charts because they're not, they're really good to look at them, but you just gotta use your really brain power to make something happen that has to, your symmetry has to, lined up really well over and over again to make some cycle work. That's a beautiful cycle. Really, really impressed. 40 weeks.
But Mo, if you go back to
I don't need to go back
like
anywhere.
no, if you go back to pre-COVID high, cycle might look a little bit different.
Well, we take the last bear market run. So if we had the largest percentage decline, we haven't had once ever since the last 4 years. Why would I have to go back? You
No,
take
because
you take the first uh,
because it's 21%, 3% pullback on tariff 2.0 um, correction. That happened very quick. That looks more similar to the COVID, crash, which was a very sharp.
yeah, this is not a sharp crash.
No, I'm talking about the tariff 2.0, 21.3% pullback versus the COVID pullback.
This is COVID right here.
Yes.
So the COVID was less than this. Let me see. 35.4. That's COVID. So the COVID here, they copy this. So the 40 weeks, this correction here, I have to remember to go from top to bottom. We're going to show negatively 10.6. Now that happened in 23 weeks. We have such a sharp reversal back to the upside. Now we haven't had anything all the way back up. But that's what the Fed was buying. So yeah, you don't have to. I mean, it's not gonna really line up because the point is this, okay? You don't. I mean, I know people need 1950 chart to compare the current move. Okay, I think this is completely ridiculous. Nobody, okay, needs a 10-year chart to trade. You simply need to take the largest correction, okay, in the last couple of years. 3, 4 years is max. It's enough, more than enough. 2-year chart is more than enough to trade. You just have to find a repeating pattern. Okay. In the end, the S&P is gonna move. The S&P average for the year is 10% anyways. On a good positive year, it goes up 20. That's it. It doesn't go 30, it doesn't go 40, it doesn't go 50. Never happened, never will. Okay. So we have a data for the last 5 years, right? That's not, where's my here? 16.39, 23.31, 24.23, down 19.44. That's the bear market low, correct? 16.99. So, no, sorry, this is a 3-year annual rate of return. So for the so from the last 4 years, so we've been tracking from here, correct? 2022 was 19.44% down for the year, right? Full reversal, another rally, another rally. So it's a double-digit growth. Double digit here, double digit here, double digit here. Not this one. This year, transport sucks. Double digit here, double digit here. So what is the average is that you see? 16.9, 43, 22, 9, 11, 11, right? So small caps, if you hold them, buy them today for the next 3 years, you average around like 10%, 11% move return on them on your money. That's just buying simple shares. So in order to make a case here, like, okay, the extreme moves are basically a double-digit moves, right? Either to the downside or to the upside. A double-digit growth is a pretty healthy growth, correct? But the point is like they're not like dropping 30% and going up 40%. ETFs don't trade like that, you know? So it just I know like going back to all these different lows and stuff, we have to focus on where is the repeating cycles happening in the market. Okay. You see, we just looked at a COVID, which is right here, because this was only this dip right there. This. I mean, we haven't had any dip, right? It was a very aggressive buying. Now, if you look at the nature of this decline, but look how sharp it was. That was 1, 2, 3, 4. 4 weeks. This is where the reversal bar came in, put the low in, and then we just reverse, right? So the magnitude, okay, of this decline was much fast and much on a fast pace, right? This dip right there is very because of this move. When you have this kind of a monster move, you don't just like S&P will never go like this. You will not see anything on the chart. You study it as long as you want. Show me the full curve. See, from here to here. See, just this is a big flat correction here as well. But the point is like you don't just like see full reversal rotations. So we'll see what happens. I'm gonna watch this one. Glad I made it. Keep an eye. These are the weekly bars. You know how many weeks and months is gonna take for this thing to show the next move. Like the point right now is you simply just mark the high. When this thing ends, how many weeks and months it will take to get back to 7,002. And then from there, we'll use the expansion and then we'll mark whatever the low is going to be. Okay. So we're just simply going to, I don't know when the low is going to made. With the only way that you're going to point this one, you're going to mark the new one is when you're going to make a new high. When you make a new high, you take that low. It's going to have several candles on the way up. And then you say like, okay, well, now we're looking for the upside. Now we're going to count 40 more weeks to see how it goes. So we're gonna keep an eye on this one. So, so we'll see what happens. So we take 40 is, I would just keep them at 40 right there. So for now, let's assume that this is the low right now. Come on, stay here. Here, like this. Maybe 2 weeks, 4 weeks. So if it's gonna be, each time, we just keep counting this thing. So now the thing is, according to this low, as of yesterday, the yesterday weekly low, because we look at a weekly chart, that this time extends out to January 1st of 2007 now, which is the next 40 weeks, but because we're counting 44, weeks forward. So whatever the low is based on the current time, right? So you count 40 forward. So right now it shows January 1st of 2007. Now, if the price dips a little bit more, so obviously the time will extend more to the sun side. So that will be like the next phase of an expansion phase that the price will recover, right, like this, whichever way it goes. And, and, you know, the only thing that I paid attention is this thing, dip, V shape, dip, massive V-shaped reversal. So I'm just wondering to see what happens. I don't know if this taco can end this war in next week or two. I don't know. I anything can happen, but that would be a hell of a move if that happens. If because market is gonna respond really, really sharp if he tackle the war. Everybody, that's the only thing. So just these are the things you're going to pay attention to. It happens twice. Okay. What happens 2 times has a very high probability it can happen again. So we'll keep an eye on this one. See how it goes. Beautiful 4 years, plenty of time. So forward this because midterm is in November. November. I'm just trying to put few pieces of puzzle together just to kind of make a case. The only way we're gonna make a really bull case is this sucker needs to start turning up. You see right there? This is just a sign. It's gonna take a little bit. See financials. Now this is this is the first sign that I need. Then you watch, I'm gonna load up. This this triggers to scanner. Okay. Scanner is gonna light up. That's when we go back to the toss, and the signal is gonna trigger there. So money is not rotating in. This is when money is out right now. So in the meantime, we're just gonna try to play cute bounces. That's it until this thing improves. This hasn't improved. That's the thing though. You see? Rotation when it turns, see red, that's when it turns blue. This is where you start sizing up trades. This. So that blue right there turns into green. That's what you go into a expansion mode. I have a step-by-step framework, okay, how it works. So when I trade, it's how I trade. I'm trying to buy something here, my size is going to be smaller because some of the rotation that you find across here already has a confirmed trend bar. Because these ones, I set them up that way. You see right there? Trend bar, colored style. It changes. I can do a random. I'll just a random. I can do by the weight, by the sector. Going to be all one color. I do trend. I need trend bars. And then from there, when it turns blue is the ones that I always try to size up those trades when it's blue. Where is this? You see right now, like these names, right? Popping up. We can do 400 mid cap. It's not going to do much. Let's see. We do a mid cap. Got a few names. It's just dead, man. Just I'm not used to seeing this. This just I run 500 like a full list of like 60, 70, 80 stocks, and then I'm just like trying to cherry pick between those. It's just not that case because it's just the way the rotation is. Market breadth sucks. See, like this is right there. You see some of them this see already turned blue, right? The other ones are still these red ones are the ones they're waiting for to turn blue as long as that momentum holds, right? And then from there, it's trying to make the move. But this has to match with the buy signal as well. This is where the new positioning is happening in the market is because of based on this rotation. So Twilio is is right here. Yeah, it's gonna be a tough case to make. You see how much a drawdown is trying to recover, but it's gonna fight this. It made its way up a little bit, but I can do this, do a quadrant bar. Now this one, if you do a quadrant bar, it tells you exactly where the stock is on the rotation bar. You see right now it's red because it's sitting in red. When it turns green, that goes into a leading quadrant. When it goes to a blue, that's the improving. See, the red is going to turn into blue, you know? So I don't really use that way. Yeah, I like to see the actual reading on that thing. It's just to flip that thing into the the rotation. You see, like right Apple right now, you see Apple had lagging, improving, leading, weakening. Now went back to a lagging. So you do it like this. The entries are here. So try to cache this. That turns into this. Remember the from red, we're looking for a blue, right? And we're looking for a green, right? So that's how rotation works. We're trying to find something here. Most of the people who don't have enough experience, they're looking for these moves. But you missed out on this entire move. You're too late to the party. They're looking for this move. So these guys who sitting and calling on CNBC every single day, I'm going to long this, I'm going to long this. They're buying stocks, they're pointing this way. There's really tons of them what stocks they pick every day. I'm trying to pick something from here, take advantage of this move, you know? So that's the difference. So if you go, I don't know what stock is this. Let's see, cart. You just have to wait for, there you go. You see rotation confirm, signal confirms. Now now the structure that you comes down to this, now it has to hold that low to make it, then the rotation has to work. If the structure fails, so this rotation that you just picked up here, what's going to happen is going to take that curve to that left side. Whatever, this, it goes like this because the structure failed. It's a system. It works. It works only based on it as long as the price hold a low. Okay, that's all it is. It just has to hold a low. That's the real structure. This is where the execution happens, right? So like this run right here, it's nothing. It's not just doesn't appear in a blue moon. It just appears from here. But you see this low right there, the price didn't dip below it. And look how much the price, well, nobody can predict that. But the point is this, we need to hold this low for this thing to stay on board. Rotation number one, rotation first, signal second. Then you hunt for your order flows that you chase in every single day. Rotation where the money is flowing. That's where the large institute is starting to build their new position. Correct? It confirms here when it's time to go. Then from there, rotation follows, so does the signal follows. That's it. That's the whole game. That's what I'm trying to match. And right now, we're in such a narrow window because of the market breadth and the rotation. When the rotation will improve, and it will, mark my word that it will. You think everybody who's thinking like this thing is going to stay like this way, these growth stuff that there, we only got the time signal here yesterday. These they don't drag and stays down for months and months. So we could see, okay, how long does it take for this to, but I don't know how long because we cannot go back where there's a 2000, where we at? 829 or 2025. I want to go. Why I have this. Uh, we just add to that point here that I know this thing for a this is not going this way. This will improve. Okay. I mean, next month could take another full on more month. Depends how everything goes. I mean, if I would have to make a case, I don't know when that because I will have a much better idea once I will see the momentum. It's not there yet. Then to make a case. Okay, growth will go. It'll be a tough one. They usually go. So I can there is one thing that I can tell you that for this year, buying hasn't started yet, but it's coming really soon. Okay, that's the only thing I can tell you. So you were trying to play bounces, you're trying to position something to the upside. My only recommendation is to size small. Once this turns, and I'll show you, and then I will, you know, then we size up. Four, five, 4 or 5 good trades, Mar, you're gonna forget about this whole month. You even have a. It's always like this because it's but trading is so damn emotional. It just feels like every time when the price coming down, it always feels like I don't know how long it's gonna take for this thing to recover because the recovery is always takes much longer. You know, and what happens? Freaking V reversals left and right over and over again. V here, V here, V here, not here. Look how aggressive the market comes back. This is going back to 2023 of summer. You just pay attention to the previous dip, how they went. But the point is we can't assume it like, well, yeah, it's gonna have another V, but you don't know. I think this war, as soon as this taco kind of backs off, market is gonna respond pretty because because right now it's under pressure because of war, right? It's the same thing he did the tariff, right? And he says like, okay, yeah, it's a good time to buy the market. Remember he sent out that tweet? That was his buy signal that everybody took. It's, I mean, look, I know he's ruthless. I get that, but it's tough to be a bear with him. It's a pain in the ass to kind of ride trend with him, because the way he say stuff, do things, right? It's tough to bet against him, to be honest. The way he is with the stock market, wealth, money, this, that, and I want to do the best, this and that. Now putting his signature on all the currency, and it just he's gonna push the market. That's how I see it. If you just look at a little bigger picture, yeah, it's. I mean, if you would have asked me right now, I mean, I know we just picked up few names here, there. If if I have to make a choice right now, what to trade and what not to trade, I would only trade either SPY, okay, or SPX. You know, S&P, I tracked them really, really good, and market profiles, earth cycles, signals and stuff. They respond. They act really. They do really well. I would much rather focus on that. Wait for the rotation to improve. Scanner is gonna light up. I know that thing for a fact. You remember this because it's being recorded, and I'm gonna show you this. You remember we're running a scans, right? I'm doing a scans right now in front of you that's showing only 15, 16 results, right? You wait when the breadth improves, when the rotation improves, the same scan, I'm going to run it for you over the weekend. Watch how you're going to see 60, 80 names on the S&P 500. Wait, just wait for it. I want to show you that. I've been doing this thing for years. I know what I built, you know? Yeah, I mean, plus SPX is really good for retirement account as well. Oh. It's a little rich, see, the thing is this, everybody would, I know that people who even don't have like, a decent size account or something, everybody will love to trade S&P. Okay. The only thing that scares most people off is the premium. It's expensive, right? That's the only thing. Like, no, I'll just do SPY, you know? That's the thing because they don't see the the actual the how rich premiums are. But it's just I understand, cost is cost, like here you wanna trade a $4,000 trade on a SPY, you gotta trade like almost like 10, 12 contracts, right? Depends on the debit. And here you want to take a $3,000, $4,000 trade on the S&P, you can either most likely trade one contract or you probably trade like two, most likely. That's it. It's not gonna be three or four or five, you know? So that's the difference. But the cost perspective is comes out to the same thing because but one you looking at the bigger number, but you sizing only like one or two compared to 10, 8 or 9 or 10, you know, more commissions, and then you have some people have like, oh, this I can get a sign for it because there's a dividend and this and this and that. You always have those 10,000 things in your head. Nothing happens to a butterfly. Don't worry about a signing. It's gonna cancel each one other out anyways. So then on the S&P, you don't have to worry about anything. It's a cash settled index. It's not it's a European style index anyways, right? It always settles on cash. You're gonna let that sucker expire in the money. Who cares? Butterfly can expire if you are in it. Let it expire. You don't pay the commission. They take it down. They don't charge you for it. You know, SPY. You always like sit and thinking like, oh, I had to close this trade because I'm gonna get a sign for it. By the time you open a trade, you pay for it. You close the trade, you pay for it. Then you got that dividend thing lingering in your head day and night. I want to close this thing because I want to take, what if I'm going to get a sign for it? And like these kind of a things like you like overwhelm like just one trade, like 10,000 different thoughts. The S&P doesn't have that anything. It's a cash settle. That's it. Whatever the price is that you're able to catch a move to the upside, let the sucker expire. You know, you don't have to close it. If you paid a premium, let's say $1,000 premium, right? If it happened to close down 300 bucks negative, that's it. You only took a loss of $300. So there's not like it depends where the close is, you always got to watch what you have. I trade S&P all the time, so it just, but I mean, I do butterflies is because I'm trying to cut the cost down as much as possible. That's the only way you can do it. You know, Iron Condor and stuff. Those I don't really mess around too much with credit spreads. That'll just a little dangerous. Just debit. Just pay for it. You have no stress. I know exactly what I pay for it. If you're wrong, you're wrong. You don't want to mess around. Credit spreads and stuff, this sounds really, really good until you get a flush out. Now, one good flush out, you toast. you know, and those are just danger. You can't predict these credit spread moves. That just becomes really, really dangerous. Just pay the debit. It's just less stress. You don't have a $50,000 worth of a credit spread to make $700, $800. Okay. Because you're receiving a credit up front, but you have 50,000 on a margin. Yeah, you don't have that. You either just pay 1,000, 12, 1,500, 1,800 bucks for a trade if you can afford to lose or whatever the case is. And say like, okay, at least I paid for it. I know exactly what my cost is. Worst case, if you don't like the position, you have a second doubt, just cut it. They're like, hey, you know what? I don't think it's gonna go. Just cut the position. Sometimes you're right. You know, sometimes you freaking end up paying a price. It happens. There's a lot of time I make good calls like, hey, you know what? Glad I took that thing down. And then sometimes you're thinking like, oh, why did I even close that position? You know, it's always like it happens to everyone. Well, not I'm not the only one. It happens to every person. Why did I close this position so early? I should have just held on to it and this and that. It's just to me, you know, it's just because all these emotions are running in, you know, sitting in your head, constantly thinking. You have a risk open, but you're freaking out. Market is tanking, but I want to make sure that my stock goes up. How is that thing is going to happen? Yeah, we're gonna do more, a lot of, um, but I can't run um, butterflies one after another. You have to keep that thing in mind as well, you know. Our main thing is butterfly, we structure it around the cycle. Okay, we need the cycle of her especially. Yeah, you can't just randomly select like I want to sell here, I want to buy here, I want to buy like here, I have a butterfly. They're not those you can't just predict stuff, you know. I want to see where what the high and low is, the retracements are, you know, the cycle is. Like there's some work behind it, you know, and I'm gonna throw like five, $6,000 just because I'm just gonna roll one after another. That's not how it works. You make one, take a day or two off just to watch to see how the price is doing, how cycle is adjust, it's making a curve or what the case is, you know, the overall condition, then just make a new one. You're still gonna have a couple days and then we'll decide to see how it goes. Because as long as you're theta positive, right? Even the fact that price does come back down, it doesn't really hurt the butterfly yet, you know? So it all depends on a delta. Yeah, there's a lot of some adjustments. It's pretty I know a lot of people that do it, but not like you know, tilting part, like bullish tilt, bearish tilt, these kind of a thing. Those are more advanced level stuff. You know, give a little bearish tilt to it, keep it neutral, aggressive, you know, upside or downside. And that kind of things are just, you know, every trade is different. You can't just say like every trade is different. So we'll see. Okay, I'm gonna have to go because I gotta take my wife's car to the Lexus store for service. You got 10,000 mile oil change. Made an appointment, so I gotta take a car over there. So that's it. I don't have anything else. The rest will just wait for this month to be over. Next 2 days. Next week is Easter and become an Easter bunny. And then start a new month. I'm gonna take clean up some of the garbage off the board before the end of the month. So look for the trade. I'm gonna just take them off, just clear the board. I don't need carry garbage over into a second quarter. So just I'll update. I don't did anything on the thing yet. Open this now. Tesla just open a new one. This one. I didn't do anything, man. Like Monday we opened Abby, right? We opened Abby, we closed here on Wednesday, right? And we had this butterfly that from last week, and then we closed this butterfly here, and then opened this IBIT because of the Bitcoin. That's it. That's all I did for the week. I'm not aggressively attacking the market, as you can see it. I'm just taking very selective trades. I'm just doing it on I mean, it feels like because we're just carrying over garbage, which I'm gonna take care of it on Monday or Tuesday. I want clean board. starting new month and the new quarter. Reposition and focus more on butterflies, to be honest, until the rotation improves. So we'll see. This one came down. Now it's slightly down, not that bad. This one down 10 points yesterday. 380, 400, 415. That's a call butterfly to the upside. So that's a 20-point spread here, 15-point spread to the upside. No debit. See, I'm, I'm paying less, as you can see. Look how I'm paying. I'm not paying that $6, $7, $8 premiums. Yeah, screw that. You see, I'm making these spreads here. Look at my cost. Three and a half is perfect. And this is, I mean, on a SPY, that's what I like to do as well. Like $3, three and a half on a SPY, debit for butterflies. So gotta make them. We'll see what it is. It just depends. You see this one, $1.75. Keeping it tight. I'm not. This is the whole week we just had. Monday right there. That's all we did. We closed one. We closed. This one was a new one we did same week, and we opened one, two, three, and four new positions. So we'll see how the rest goes. The rest I'm gonna clear those ones out on Monday, and then I'll update everything here. Okay, whatever it is, just deal with it. This will be all updated. Yeah, let's go. This I already closed. I had to update this. So yeah, this garbage has to go. I can't stand this bullshit. It just didn't work. Didn't work. What can we do? These are all closed. I'll update. I have everything on the chat GPT. It tracks the full. I'll update everything quick and move on to a fresh one and just go from there. That's what we can do. Oops. Yeah, frame this one on the wall. We'll see. I need to put this here. It's too early. I'm just wondering that how the S&P will end the how it's gonna end up taking out this double top. That's the only thing I want to see. Time will tell. You know, October, November. You see, I need to do because I've been like this. To go top to bottom. It's just I always use the manual. This one is so easy. You just take and drag, just drag it, whatever so easy changes the percentage. I just found this one on tools. I was like, I just rather use this one. Looks this little big banner looks pretty good. So yeah, just the range. Take a price measure it from this high, which is this box. Oops. Once you mess up on the tool and Optima, you have to go select it again. It just we won't let you. 8.7. Yeah, I've been going down from the bottom up. That's why it's supposed to show minus because you're coming from top to bottom. Peak to trough. 7.5. 4.8, 4.9. That's the down. No, I wouldn't go this. This is the higher high. You can't go all the way down anyways. Oops. This one goes from bottom up. Anytime the box goes up, has to be green. Every time the box comes down below the previous box, is to be red. This one right there has to be neutral because this is an inside month. This is a positive 4.9 because it was a higher box. This is supposed to be a lower because it was this box is lower than this one. It's an excellent way to look at the price. 5.8. Now you take this thing, mark red. Oops. Mark this one red. So any box that appears to the bottom of the previous one has to be red. Any box that appears up, green. Any box stays in between, pink. It's neutral. All right, so that's going to be our color codes. Down red, up green, neutral pink. So this is the mess that we're in right now since the October and January high of tech. Okay. I'm going to adjust this one as well because I have two of them. This. Oh, that's the signal right there. Yeah, I got to do the same thing. Okay, this is up green. November was down. So I'm going to do the same exact thing here from this top to this. There you go. Goes red. Yeah, I kept these ones up green, up green. This was down. That's supposed to be. Oop, this is not this. Now this one's supposed to be down from here to here. 3.1. This is supposed to be down. Come on. This time and price and the one that is always confused. Here you go. That's it. I need that magnet. There you go. 7.9 gives you the exact range. March high, March low. Now we have this and this. Down red, up green, neutral pink. That's it. That is just follow three colors. We'll see how April goes. So really, I have a lot of ways to. There's another way to need to see where the swing high and low is. Okay. So you can do from 52 weeks low. You can do a GAN box. Right there. Bring that thing to a daily. This is another way to find support and resistance. These lines can work like a charm sometimes, you know? So I did on the weekly. It gives you potential support. You bring this, the square division. There you can grid lines. I don't want this forward. Reverse. Do a reverse. No, over this box. Here. Yeah, reverse angle is going to give you pretty nice. You see right there, look. These lines will identify exact lows, and when if the price goes up to the resistance. You're basically looking for a support and resistance. It's the box that does the work for the price. So it's remarkable how it works. You know, it's crazy. Look at this low yesterday. How it touches the line. Look. See? If this low break, then this intersection comes right there, this low. This breaks, this comes. You see, like however the price will shift, you know, you can find a really good way where the support and resistance is. You know, a lot of time I I nail bottoms, right? Good thing I'm doing. So I was down that. It's like, just give me a little bit of time, everybody. Just wait. Land there. This is a very good. GAN has excellent stuff, man. It just some people just don't care to use it enough. Some great tools. You know, swings are, you know, there's basically I mean, it doesn't give you any signals and stuff, but what you're trying to do is like, I'm trying to find resistance. Okay, where will be my potential resistance is, you know, so you can see how the price moves in grids, and when it goes, where it finds resistance. You see right there, here, here. Look at these touches on these lines on this. You know, when the price comes out of that grid box, what will be the next potential upside line? You see right the intersection right there. Look right there. Look at this now. Backs off, and then the price went up to a second. You know, so you can like look up like this. You see resistance coming this way. It's just it all angles that defines these turns, forward, reverse angles. Look right there. It's gonna it hits the grid line right there. That's where your resistance level is. So if you really want to know, like, okay, what would be the exact level, you just simply scroll a mouse here, grab a price marker, 67.91. Even the fact that the price kind of poked above it, it backs off. But that's not the point. The point is to see what the level is to touch the print on the line right there. See on the way back down here, that's your support. That's your support. Then it breaks here. That's your support right there. See, the lines do all the work for you back and forth. You just the price stays in between these grids, move from one to another to another to another, you know? Good stuff, huh? All right, I gotta go. Won't keep you up all day here. All right, I upload this thing. I gotta take the car. Oh,
Thank you.
you're welcome. Enjoy the rest of the day.
You too.
We'll
Bye.
talk later. Bye bye.